Despite the challenges that Israel faces, being at the heart of the volatile Middle East region, it has exhibited consistent economic growth. Israeli stocks comprise a diverse range of companies which have a global footprint in the world's economy, including numerous industry leaders. In the second half of 2012, Israel outperformed emerging and developed market equities and outperformed the United States by a wide margin. Israeli companies are highly global and major players in both emerging and developed economies worldwide. Israeli firms such as Teva, Israel Chemicals, Strauss Elite are market leaders in major developed and emerging markets such as the United States, China, Brazil, and Russia. In addition, well-known American companies like IBM, General Electric, Intel, Procter & Gamble, and Cisco, to name just a few, are heavily invested in Israel and have been so since the mid-20th century. Israeli companies are listed not only on the Tel Aviv Stock Exchange, but also on American, European, and Asian exchanges. Israeli companies are prominent on NASDAQ, which lists about 60 Israeli stocks, making Israel the third most represented country on the exchange after the United States and China. Furthermore, the strength of the Israeli shekel makes it desirable for foreign investors to have exposure to Israeli currency through investment in Israeli securities and assets. The shekel performed well, especially as compared to other currencies, during the 2008-2009 financial and geopolitical crisis. Israeli companies are entrepreneurial, highly competitive, and world leaders in technological innovation in all areas, from high-tech to biotech to agrotech. Israel, one of the smallest countries in the world, receives the third greatest amount of global venture capital investment and has been ranked first in the world for the number of startup businesses per capita. Israel's commitment to research and development contributes to these statistics. Israel invests nearly 5% of GPD in research and development, which in percentage terms is more than other countries in the world. Israel is also home to more than 60 research and development centers of leading foreign multinational corporations, including Microsoft, Motorola, Google, and Dutch Telecom. One of the results of Israel's commitment to research and development is that it has the highest percentage of high-tech production relative to GDP of any country in the world, and the second highest concentration of high-tech companies after the United States. The high-tech industry now compares Silicon Valley to Israel's Silicon Wadi, the heart of the country's tech sector. The positive impact on Israel's economy of the natural gas reserves is already being felt. The market believes that in the coming months, electricity rates will either be reduced or rise much less than they have in recent months. Also, gas prices are dropping as a side effect of the first natural gas deliveries. In addition to reducing inflationary pressures in the economy and eventually creating jobs, energy interdependence will cause a dramatic positive shift in Israel's balance of payments, making Israel a wealthier and even more credit-worthy nation on the whole. In conclusion, investors should consider an allocation to Israel equities, both because of the growth and diversification potential. While there are many risks that confront Israel, both economic and geopolitical, its economies and markets have consistently weathered the storms of war and economic volatility to deliver robust growth and strong returns in the long term. Investors who ignore this opportunity could be missing out on superior returns.